Hey, welcome to the Closing Beat, everybody. Happy Friday. Hope you had a good week here so far. Welcome, welcome. We're financial advisors here at Jazz Wealth. We manage retirement accounts. We do long-term investing for people, but we also try to teach along the way. So every Thursday we do a class for customers, usually private. Last night's happened to be public, so you can actually go on our YouTube channel if you want to check it out, how active traders make their dough. So we kind of had some fun with that. Just talking about active trading. Not always we talk about that. Sometimes retirement, sometimes other things there. Yeah, feel free to check it out. Also, we're playing a game. It's called Guess the Dow. We have a winner, and it's one of our customers. Finally, one of you guys won. So we've been doing this game for last, 4 or 5 weeks now, and none of our customers have won yet. Well, today that is different. Mr. Mike S., you know who you are, rather unique last name. You have won the Guess the Dow for the week. Closest without going over, so you can bet on where you think the Dow will close next week. You still have until tomorrow at noon to do that if you want to play. And Mr. Mike, he decided to have his account credited. So if you're one of our customers and you win, like Mike here, we can credit your account the $100 if you like. If you're not a customer, no strings attached. We'll just send you a $100 gift card. We've been having a lot of fun with that one, and it's so cool to kind of see how right at the end of the day, it's like, oh, this person's going to win. Nope, now it's this person. Check it out. The website's there on the bottom right-hand corner of the page. Hey, we're also live on Roku. If you go to the Investors News channel, it's a free channel. You can add to your TV or Roku on there, so you have it as an app that you can check out. We are live on there as well. Next week, the class for our customers, by the way, is going to be on sort of a secret, little-known like tax advantage you can do when you're rolling over a 401k to even help save even more. Not that it costs you anything, but a little tricks in there. So we'll be doing that next week, of course. All right, let's go over the stock market today. We lost 67 points on the Dow. We lost 18 in the S&P. The NASDAQ lost a total of 60. The Russell 2000 actually barely lost. That was pretty cool. So it had a kind of a smaller down day. I don't know if that means anything at the moment, but it was just nice to see. Because the Russell 2000, small cap stocks have been the laggard, right? Little mid caps as well, but small caps have been laggards there. So we've all been kind of cheering them on. I'm sure if you have a 401k with small caps in there, it's been holding you back a little bit. So we want that to, of course, improve there. Earnings-wise, we've got about 15% of the S&P 500 has already reported earnings. So we're in the very, very beginning stages of earnings season. But so far, there's really been no fireworks as a whole, right? Certain stocks, I mean, obviously have had their good days and bad days and things like that. But as a whole, there hasn't really been any real fireworks, but there also really hasn't been any surprises. So the stock market's kind of just floated around in this little area here with not a whole lot to go on, which means they're waiting for the Fed. We covered like the statistics about at this point in earnings season, how is everything doing? We covered that yesterday. Today's just an easier Friday way to say, well, all that data that I shared with you yesterday just basically means no fireworks or no real surprises. So we're all sort of waiting on the Fed. And here's what happened. The Fed has made a bit of a mistake. Maybe. We'll see. I don't know if this is intentional or not. But the market really started higher. Even overnight, the Dow was higher by 125 points. Dow futures, S&P futures, it was like, I don't know, 11, 12 o'clock at night was looking. They were up 10. Things were looking pretty good. But it's because the Fed's got everybody sort of confused. Here's what happened. Yesterday, and I don't normally follow this drama stuff, but this is affecting the market, so we're going to talk about this one. Yesterday, you had, I pointed this out, John Williams, he's a voting Fed member. He came out and said, you know what, we need to act quickly to reduce rates now ahead of any sort of market downturn. If we even feel like the markets are going to move lower, since we're so close to zero, we should try to fight that decline off by lowering rates right now. So his exact words were, we need to be, quote, very aggressive and act quickly. Because if there's a downturn, we're too close to the zero lower bound, which just means rates are already close to zero. What are we supposed to do? If the economy really tanks, what are we going to go? Past zero? Go inverted like other, or not inverted, but go negative rates like other countries? So he came out and said that. In the middle of the day yesterday, we pointed out the market started a little bit of a rally. Well, after we finished our show here on TV, you got Richard Clarida. He's the vice chairman. I don't think he has voting rights. He said the exact same words. Now remember, the Fed's job is to go out there and flap their jaw. They call it jawboning. I'm not picking on them. This is called jawboning. Their job is to go out there and sort of talk so that we get everybody prepared for what they're about to do, whether they're raising or lowering rates. So all this week, we'd been kind of hearing like, oh, okay, it seems like, and all last week, by the way, all right, they're going to cut rates by 1/4 point, getting everybody excited. Because you had the guy in the middle of the day say that, you had a person go on TV and say the exact same things, like we need to act aggressively, we need to fight this thing off if there's going to be a downturn. All of a sudden, everybody went, they're going to cut by 50 basis points, right? So odds went from 40 to 50% that they were going to cut by 2 cuts, which is just 1/4 point twice or 50 basis points. So everybody got all excited, and then the Fed puts out an email. They sent it to the media. If you happen to be on that list, you got it too. Fed puts out an email, basically says, hey, what Williams said, what John Williams said in the middle of the day, he was just referring to data, right, from previous examples. He wasn't saying we should do that now. He was just saying based on the old data, we should probably do this, and was not indicative of any decisions that the Fed was going to make. They never do that. They just never, ever, ever do that. They never come out and try to like contradict themselves. It's like sort of crazy that they would even think to do something like that. So now, even today after hours, you've got another Fed president, Eric Rosengren. He says, we should wait. Right? Maybe we shouldn't cut rates. Maybe we should just wait to do anything at all. We've got plenty of time. So if you're following these people, which I follow them, keep track of their comments, obviously, you've got no idea what's going on. You're like, wait a minute. So what are we doing? Are we cutting rates or not? So a bit of a mess today overall, just kind of in response to all that. Didn't mean to spend so much time on that. Eric Rosengren, by the way, he's now the second voting Fed member, to say, hey, maybe we should hold off. Maybe we shouldn't do anything with rates this go around. This will all be over in about a week and a few days. Anyways, well, let's go over. Let's just start talking about the markets here. Let's see if this little guy works. Yeah, there we go. S&P 500 pulled back a little bit today. I don't like what happened today. If you have to sort of play the short term or wonder what's going to happen in the short term, you don't like that. We gapped higher, everything was looking good, and then we just faded away and gave it up all day today. Not really excited about sort of what happened there. If you look at, where is it? There were 180 names in the S&P 500 today that lost 1% or more. If you ran that first thing this morning to see how many stocks were down 1% or more, nowhere near that, right? It was like 12. So all day, stocks just lost. They closed on their lows. That's not a good sign. Closing on their lows. I'm just thinking of names. I don't have any prepared here for you, but I'm just thinking of names. Delta, right? On the lows. Monster Energy was another one I saw there. Closing not only down 1% or more, but closing on the lows of the day. That's not a good sign when you see things like that. So in the short term, today was not the greatest of Fridays, if you know, in my opinion. If we look at the NASDAQ, same thing, started higher, finished the day lower. You just don't like to see those kind of reversals. We're in the middle of an uptrend. Why should that happen? If everybody's bullish and we're in the middle of the uptrend, things should be looking pretty good there. If we go over to individual sectors, your sort of news of the day oil-wise is Iran officially did take that the oil tanker. So yesterday we talked about Iran seizing an oil tanker, and we were like, you know, hey, that's kind of wrong. Who did they take? What tanker did they take? Today we found out it was a UK-based tanker, and the company actually confirmed that we had a ship going that way. We lost communication with the ship, and now we see that the ship was heading north towards Iran, right? So that was their comment, sort of confirming all that. So oil rallied a little bit on that one. Finally, got a little bit of a bounce there. By the way, oil and energy in general is your widest moving sector for the week. So week over week, what had the biggest move? Well, it's energy. So that's the problem is it was just to the downside. So not very good there. If you look at something like the XLE, however you like to follow energy, you're going to notice that this had a bigger swing week over week than any other sector in the markets. The second worst was communication services. You can kind of understand that. Biggest mover to the downside, that's Netflix, really, because of that earnings in there. And then Facebook was a little bit weak as well. It doesn't It's not horrible because the energy sector and communication services were the most overbought sectors of the S&P 500. So essentially they were not way overbought, but they were overbought, and they're just sort of breathing off a little steam. You just don't like to see how it happened. The sort of main lesson and focus of the day is how the market closed on the lows. You just don't like that in the short term. I started the week by saying you got to be sort of expecting a pullback, and if it happened, you're okay with it. It's totally fine. This sort of solidifies that comment and really puts a stamp on it if you're going to see that. All right. In the commodity space, silver was your biggest mover week over week. I probably didn't need to tell you that. We've been talking about that all week. Amazing moves there. Finally started to pull back a little bit today, but not before it went to new highs again. Very extended in the short term. We've pointed out numerous one of these sort of patterns over time here between Bitcoin and when things get extended and overbought in the short term, they do take a break. That break looks to have been started today. Currently, the most overbought sector, by the way, is your consumer staples. XLP is the consumer staples fund that I use to track this. Just a steady uptrend. It is the most overbought sector, followed by tech. It really doesn't matter how you want to look at tech here. I'll use XLK. That's the second most overbought sector there. All right. A couple other things. Transports. There you go. Transport's a little bit higher today and have been recovering off that CSX news. This is really all that happened this week, if this helps you real quick. So early in the, not sure why that happened. Early in the week, you had CSX reporting earnings, and it wasn't very good. The CEO had some really negative comments, actually, and we're like, uh-oh, is this an issue in this sector? Well, we had Union Pacific, we had Kansas City Southern. They reported earnings, and they said, no, it's not the same thing for us. It just must be CSX. And so for the rest of the week, not only have the transports been trying to rally, but some of these stocks as well have been trying to rally inside of there as well. All right, inside the S&P 500, you got 75% of the stocks still above their 50-day moving average. We have hovered in a range between 75 and 82% all week. It's not a big range, right? So it tells you the markets didn't do anything super exciting all week long. Little tiny moves. Of those stocks that are above their 50-day moving average, half of them are within 5% of hitting a new 52-week high, right? So you got stocks that are floating around the 52-week high and naturally above the 50-day moving average, but these aren't stocks that are just sort of breaking above the 50-day, which is my blue line on the chart there. These are stocks that are sitting around highs there, at least half of them, so looking pretty good there. Tech now has the most number of stocks above their 50-day moving average. It's got 92% of all the stocks in the tech sector are above the 50-day moving average. They overtook banks this week. And on the downside, if you're interested, you could probably guess. Energy is on the downside. That's the weakest with only 30% of the stocks there. And REITs. REITs have been pulling back here. We could just use like whatever you want, FRLEL to the downside. They are the second as far as stocks not above the 50-day moving average, right at 59%. And that number is going to change as of the close today, because naturally it had a pretty nasty day there. One of the worst performers of the area there. In the S&P 500, you got 45 new 52-week highs, was 35 yesterday. Isn't that interesting? You think about that? Like, that's a data point you could just kind of skim over, and I may not make a big deal out of it, but you got 45 new highs today. What'd the market do? It went down. You had 35 yesterday. What'd the market do? It went up. What's going on, right? So if I painted a negative picture for you in the beginning of this class, you kind of look at that and go, all right, dude, what's the big deal, man? We still got some things making some new highs. It's not all that crazy out there. One that I want to point out is CMI. If you like looking through the 52-week highs list, you kind of like, that's a breakout there. It's not perfect, but broke out over these highs and basically closed in what would be considered a breakout on a down day. So it gets a relative strength point there if you're a technical trader. You had 6 new lows. And XEC, I've pointed it out every single day this week. It has made new 52-week lows every single day, today included. And there's 2 others that are in the REITs category. Simon Property, which was already pretty weak, broke down today on the weakness in the REIT space. And Macerich, I can't say that name. I never can say it right. Down 2%, hit 52-week lows. These were stocks in the REITs category that were already weak to begin with. All right. Yield curve. You guys like talking about the yield curve? It finally went positive. Now, it sort of touched on this yesterday. Not me. It sort of went positive yesterday, but it was more a little convincing today. So it has been 40 days, by the way, that the yield curve was inverted. Now, 4 out of 10 times when the yield curve is inverted and then goes positive, the markets are higher 6 months later, only 4 out of 10 times. Average loss is only 1%, so it's not like it's a big move and, oh my God, the world's going to end. Nope. Only 40% of the time was the market higher 6 months later. If you go a year later, 50% of the time, the market was higher, averaging about a 0.5% gain. What does that tell you? If you're not into the numbers, it tells you it's really not interesting data, right? I ran it just to see what would happen. Is there anything that we should be looking at here? No, it's really just, a little bit more volatile as you go down the road, but it's really a crapshoot there, so nothing to go too crazy over, in my opinion. So we'll keep track of that as well for you, but I wanted to point that out. Stock news. You don't like what happened to Microsoft today. Great earnings. Everything looked good. It started the day strong, but it succumbed to the market. It finished the day basically flat. You had a great gap up there and a lot of profit taking going into the day. They beat on earnings, beat on revenue. The cloud division, they call it the intelligent cloud division, I believe, now makes up 34% of their total revenue and getting better, right? Slowly just getting better and better, right? Slowly just getting better and better there. But today, investors took their profits. Kansas City Southern, we talked about this. They beat on earnings, beat on revenue. It just lets you know that that little blip from CSX on Tuesday really was just a blip, right? The sector, as of now, is not in some sort of big issue there. You got Boeing higher, 4.5% today. This started yesterday after hours. We kind of talked about them. They expect to charge off basically $5 billion. It's like $4.91 billion in the second quarter. All in one quarter, not like over the year or over 10 years. Nope, all just one shot. Boom. The next quarterly earnings that they report will include a $4.91 billion charge off. Holy cow, right? I mean, that's pretty crazy. So why is the stock higher, by the way? Anytime there's a lawsuit around a company or there's some unknown event, we don't know what to do with that, right? We don't know what the eventual cost is going to be. Well, everybody asks, hey, how much is this going to hurt Boeing? What's going to be the problem here? All you can do is really price it into your decision making when you are buying or selling the stock. Well, now that we know Boeing has crunched the numbers and they've found out that it is in fact going to be $4.9 something billion, it adds closure, right? It allows analysts to go, well, in that case, the stock is undervalued, right? It's actually not that bad. Take out that $8.74 or whatever it is per share, and you find that, hey, the stock is technically undervalued by maybe $12, $13. Just my opinion. I'm not telling you to buy it, but that's what you would look at. So when you're able to take a final amount and back it out of the total cost per share, you're able to find out, all right, that's not so bad. Stock price moves a little bit higher, and now we have some clarity, right? They've put numbers behind it. It will likely be a little bit higher than the 4.91 over time because we're not solved yet. We haven't totally, gone through the issue here. It could get worse. It may be done sooner. Who knows? But at least they were able to put that out there. And that's really all I have for you as far as the as far as that goes. Earnings. First thing Monday, you'll have GNC if you like that, and you have Halliburton. Schlumberger reported earnings today that were really good. Stock did well, I believe. Stock was down, but did it close lower after that? I think it started off well. Am I thinking of the right one? Schlumberger in the oil space. It did start positive on the day. Yeah, it was basically flat. Yeah. Anyways, Halliburton reports earnings. Monday after hours, you'll have Logitech. Steel Dynamics, which will, by the way, that'll be your highest probability of being positive the next day at 62%. Ameritrade, TD Ameritrade will report. Whirlpool, that'll be an interesting one from a headline perspective. And Zions Bank, that'll be your worst performer or has the probability of being the worst performer, down only positive the next day by 46% of the time. I don't know if you care for those numbers, but I like looking at them, so I share them with you. Yep. Okay, I covered it all. Let's see if you have any questions, and we'll be on our way here. So yield curve wasn't inverted long enough to signal a possible recession. Yeah, we went through this. I mean, even if it made it long enough, it never happens right away. Do you remember how panicked people were when it was like, oh my God, the yield curve inverted, we're crashing, right? It's a good lesson on should I really be panicked about this stuff? Right? Just because a study says this or that, should I really, really be worried? Probably not, right? And now you have the stats going forward. You think Boeing's a trap? All right, I like it. Remember, no matter what you learn about the markets, and this was great last night, the class that we did, no matter what you learn or someone's strategy, or you see someone buying or selling a different way than I do or someone else does, there's no wrong way to go about this. There's always going to be someone that disagrees with you. That is the nature of the market. When you press the buy button, somebody just disagreed with you. Whoever sold to you disagrees with your decision. It's totally cool. It's just the nature of the beast. Nope, 40 days. Seen where Kramer recommended a new and it jumped quite a bit. Yeah, he's got that sort of power, doesn't he? I don't have that power. That's with great power comes great responsibility there. He's done a good job with it. Any thoughts on, what was it? Chipotle? Oops. Any thoughts on Chipotle? Yeah, same concept here. You don't like how it closed today. If you own the stock in the ultra short term, you go, darn it, you never want to see it close so aggressively near lows in an uptrend like that. I just don't like that pattern. There were 31 other names, including Chipotle, that did that today in the S&P 500. It's not a lot, but it's just, is that like, you got to ask yourself, is that a little warning there? Should I be ready? I think so. So Jim's asking about the Allergan and AbbVie merger there. I don't even follow it. Anything in that space I don't follow or keep track of. I'm not good at it. I mean, I know, like, what do you say? Like, I'm man enough to say when I'm not good at something. Yeah, that sector bests me every time, so I don't follow it. I would be the wrong guy to ask there. Nick says the Dow's rising till the rest of the year. Nothing else matters. That would be beyond a record if it did. So you're asking for, what are we at, 100 years? 1 in 100 shot. Tesla did well. That's one of those weeks where Tesla just sort of, it didn't stay out of the news, but it wasn't front and center all day. Slow little rally there. Not bad. Not good. I'm happy for you. Yep. Haven't read it, Jack. Microsoft, yeah, same thing. Yep, you got it right. So Morningstar saying, yeah, that Microsoft closed near lows as well. Not always a bad thing, but it's just, if you could have your preference, of course, you don't want to see too many stocks do that. Yep. Any thoughts on Shopify? Yeah, the new Chewy new IPO out, and also what was it? Chewy CrowdStrike. They did really well also. Shopify just looking good, nice and steady. There are a lot of stocks like this. There are just plenty of stocks in a consistent uptrend that are just wiggling around as they move higher. And that's why you look at this and go, all right, maybe in the short term we pull back a little, but as a whole, everything seems very strong. Shopify, yeah, that is quite the stock there, by the way. Just this year, almost a triple. Crazy. You like to watch it at the gym. I'm shooting for no more than 30 minutes. I'm trying to stop at the 30-minute mark, if that helps you, Stephen. So as long as you plan on working out for 30 minutes, I'm happy to help you there. All right, let's take a look here. What about Slack? Yeah, unfortunately, Slack moving lower. They've just because a company goes public doesn't mean it's like a great deal. Now, you might think, oh, they're all good deals because I saw what Beyond Meats did, and well, that's exciting. Yeah, you know how I feel about that one. Thoughts on the amount of debt the U.S. has? I mean, it's a concern. I don't have like any sort of amazing thesis or stat on that. It's almost impossible. Yep. Is that a concern for you? Some people are really passionate about it. That's fine. There's a friend of mine, I believe he's watching, who hasn't invested in years, because now he's an active trader, so he still buys and sells and does his thing. He's scared to death of that. Would be a great guy to have on the show, actually, now that I think about it. Looking back in the rail space, did the other rails bring up CSX? I didn't really see if CSX had a good day today. Let me go back and look. It did not. So CSX is still hovering near those lows. If I understand the correction, or if I understand your question right, CSX is not moving higher. So the other rails did their thing. CSX should not benefit too much in sympathy because of what happened there with their earnings. So same with Netflix. I saw an article come out today where they said when Netflix does this, it's a good buy, and they were talking about the gap lower. What? They must not have seen the stats on that one. Oh, Harry, don't get me started on that, right? There's a number of names we could wonder how people pay that much of a multiple. Not on a Friday. Come on, it's been a pretty good week. You don't want to get fired up on a Friday. Okay, I think I've answered all your questions. You guys are now prepped for next week. Monday, going to do an interesting video that'll go out at 1 o'clock. We had a guy come by who has some concerns. We're going to go through an investment plan for him. I am going to attempt to provide advice to that situation. So if you want to compare yourself and kind of see how you're doing there, we'll see, I'm sort of follow up with that Dave Ramsey video where he, said you should invest the same way your whole life. Here's a great example of a guy I met with this morning who would not be able to handle that. But how do we still hit his goal even though he can't handle investing in that way? And he's young. So we're going to cover that on a video on Monday. We'll might be a little bit longer one, but not the class here, but the 1 o'clock video. All right, that's all I have for you. I hope you enjoy the rest of your day. Have a great weekend. I appreciate you watching, and we will see you Monday.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.